Hey guys, Jeff with OptionBoxer.com. So got to looking at some of my more recent videos, and it seems pretty obvious to me that you guys really like the videos I've done related to the covered calls or the wheel strategy specifically. And so it made sense. I had some disposable income when I got my tax return, so it made sense for me to take some of that money, put it into my old Robinhood account, and kind of start at ground zero and build that account over time and just kind of document in video form how things have went, the decisions I made, the profits, the losses along the way. That way, if anybody comes along 6 months, a year from now, they can kind of see how I've been able to grow the account using just the wheel strategy. And we'll look specifically at the plan that I'm going to put in place to try to do this. But let's start by looking at the spreadsheet. The spreadsheet that I'm going to use to track all the data. This is available on OptionBoxer.com. But please know when you get your hands on that spreadsheet, it's going to look a little different than what I have here on this, or what I'm going to show you here on the screen. But for those that are interested in this spreadsheet, if you just reach out to me in the comments, I'm happy to share it at OptionBoxer.com. I'll leave a link to the free trading tools page there so that you guys can download it at your leisure. Let's go and turn our attention now to the spreadsheet on the screen, and I'll walk through kind of some of the changes that are different from what's currently available on OptionBoxer. Starting at the top left is just the realized profit and loss. That's kind of just the income all totaled up. We'll skip the company for now. We'll talk more about that in just a second. The shares I have at the moment are 5 shares. I bought 5 shares, and we'll look at that when we get into Robinhood more specifically. But I've got the total share cost. This is not an adjusted share cost. This is not taking the income out. This is just what I paid for the 5 shares. I want to always try to sell my covered calls above my actual cost. That way I don't cut into the income that I've made on the position or the total portfolio. The cost per share is $12.09. You can see that kind of noted here. Cost per share is $12.09. My adjusted cost per share is taking the income that I've made and subtracting that out. So my adjusted cost per share is $9.38. For me, I wanted to kind of keep track of that number. And then my unrealized P&L is my total income plus whatever market gain or loss I may be currently looking at the moment. To the right of the screen, you'll see total return. That's kind of just my goal. That's what I want to make on this account by the end of the year, which is December 31st. I'd like to increase this account by $300 or make $300 in income by that time. And the percent to goal is just the amount that I've already made towards that $300. So I've already made 4.51%. So a pretty good start. And I've only been at it for about a week here. So not a bad week, not a bad way to start the week. Now looking at some of the trades that I made, you can see I bought 5 shares for $12.09. And I did that to kind of just set the baseline. Kind of anytime you trade the wheel strategy, you're always trying to lower that cost basis as low as you can. And so I just kind of drew the line in the sand at $12.09. It's just where I got filled. And so from there, I'll just continue to try to lower my cost basis. As you can see, I've done that by selling the $11.50 put, which is lower than the $12.09. And then I'll continue to do that as time goes by. And then everything else is the same as the spreadsheet that you'll get at OptionBoxer.com. Before we jump over to Robinhood, let's take a look at this income graph. I basically created an income calendar. Basically, it's just gonna calculate month per month for the next 5 to 6 years. It's just going to calculate the amount of income or possibly loss that may result from any given position. And then it's going to kind of tally it all up in this nice package here where it says income detail by month. So we won't spend a lot of time looking at the income calendar. That's kind of behind the scenes just so we can create this graph here. And that way each month we can look and say, okay, I did a lot better this month, or this month wasn't as good. Ideally, over time, the income per month will grow. And of course the account will grow with it. But let's kind of take a look at the plan. Let's kind of just step back here for just a second. You'll see that I chose Energy Transfer Partners. I did that because currently in the market, I feel like they're relatively strong. They're in the energy sector. The energy sector has been doing pretty good. At some point, I do suspect the energy sector will turn down. But I like Energy Transfer. I held them in my long-term portfolio on Thinkorswim or on TD Ameritrade. And so I sold those shares there, and it made sense for me to use them here because they pay a nice dividend. For the time being, they've been growing their dividend. Now, if the sector turns down and profits kind of fade or kind of level off, then I do think they will cut the dividend back down at some point. But I want to seek to lower the cost basis with every move, whether I'm selling a put, whether I'm selling a call, trying to take in more income. All of that is with the hope that I can lower my cost basis. I don't plan on rolling too many trades, but if I do, it's only going to be to put myself at a better strike or to make more income. Current dividend is 30 cents per share, or 0.305, and I want to buy 5 shares anytime price is below my cost basis. That's going to do 2 things for me. That's going to, number one, lower my cost basis a little bit, but it's also going to give me just a little bit larger dividend every single time that the share price drops. I'll be able to collect a few more shares, lower my cost basis, and kind of up my dividend at the same time. So from a long-term standpoint, that really makes the most sense. What I'd like to do, and what I'm going to do, is I've put $1,500 into this account, and I'm going to add $100 per month until I have enough to be able to not only own 100 shares, but also sell the cash secured put. And that way I can constantly be taking premium from the put side and premium from the covered call side and kind of multiply my income that way. I'm going to add $100 per month up to about $2,500, or depending on where the share price Energy Transfer Partners goes. And then roll trades only, like I said, to improve the strike or collect additional income. Now, there are a couple of extenuating circumstances that would cause me to abandon Energy Transfer Partners, possibly look for another candidate. And I may do that at any point anyway, but these are going to be some deal breakers for this particular position. If dividend cuts substantially and another asset becomes more attractive, well, if they cut the dividend substantially, now I'm not making the income that I really want on this particular asset. It makes more sense to go out in the market and find something else that maybe is more desirable at that time. If the options market dries up and I'm not able to sell covered calls or cash secure puts, obviously that kind of kills the wheel strategy where it stands. It's not the most liquid options market at the moment when return is enough to move to a higher quality asset. So that's kind of my plan at this moment. Let's go ahead and take a look at Robinhood on the screen here now, and you can see right now I'm at $1,505. I had a free share that's been sitting in my account, so I sold it for about $3.50 or so. So I'm not up $5.86. I'm up by $1 and some change. See, I currently have the 1150 put. Continue to collect shares, increase my dividend amount, and lower my cost basis all at the same time, because again, ultimately I want to hold 100 shares. I want to have enough buying power to be able to sell the cash secure put, collect the income on the covered call on the shares that I'm holding, and continue to kind of double dip there on selling a cash secured put and selling a covered call. The last thing I want to show you here on Robinhood before we look at the history page is I've also turned on the interest. And when we look at the interest or the history page, you'll see that I've already made 56 cents in interest. I don't know if they're gonna, because I just got into the cash secured put today, so I don't know if my cash earning interest will go down, which means the interest that I accrue will go down. I am going to add $100 a month, so realistically I may get 20 or 30 cents a month just in interest, but every little bit helps because I'm trying to grow the account using every dollar I can. And if you have a bigger account, for those that are interested, if you have a bigger account at Robinhood or you have more money in your account, you may consider turning on, if you turn on Robinhood Gold. So I think it's $5 a month, but you do earn 4.4% on your money. So you may be able to earn enough on the cash that you don't have invested or that's just sitting idle. As you find different trading candidates, you may be able to use that 4.4% to offset the $5 a month and still make some money doing it that way. Let's go and take a look at the history tab really quick. You can see the interest was 54 cents. You can see I sold the 1150 put for $13. I tried to get into a different put, just wasn't able to get the fill price. And then I bought the 5 shares for $12.09. So that's all there is to report at this particular time. If you like the spreadsheet, or if you think that that's something you would prefer to use over and above the spreadsheet that is already available at OptionBoxer, feel free to reach me in the comments. But guys, thank you so much for watching. I hope you'll stay with this video series, and certainly mention to me as well in the comments if there's other things you want to see or other things you want to hear me talk about. Thank you guys so much for watching. Until the next video, God bless and take care.